Hey everybody, how's it going? Wife Kimberly is here. My lovely wife. How you doing, babe? Anyway, Valerie, good evening. Everett, Michael, Philip, Sledge, how's it going? Philip, of course, Tara, Daniel, Valerie. Yeah, same few people saying, hey, Wrongamer. Hey, my man. Wrongamer just hooked me up with a Tesla test drive next week. See how that goes. Yeah, hit the like button, as Michael says. And PD will probably be in here saying that too. Welcome, everybody. This is 30 Minutes of Awesome, 30 MA. Greg, brand new. Glad you shouted it out, my man. Thank you. Let's go ahead and pop me over here. And, oh, already got the dumpster fire going. There we go. Try that again. And what's on tap? November 7th. Welcome, welcome. And we got RIVN, we got Roblox, we got all sorts of earnings. We got Powell speeches galore. And we're going to do 30 minutes of your requests when we get there. Hold up on it. Don't throw it in yet. Just wait for it. Hold. And when we get there, it'll be one request per person. Let somebody else go, and then you can go again. So, anyway. Alrighty. Let's see if we can get something going here. Now, like I said, earnings all week. And what does that mean exactly? Well, and of course, I would cover up my freaking. I had that right there. I just got all these things ready to pull over, and it's gone. And it's gone. There it is, right there. There we go. We are right here Tuesday after the close. RIVN, Devon, Upstart, Oxy, Wish, Mosaic, Gilead, Axon, Dutch Bros, Toast. Tomorrow morning, Roblox, Fisker, Warner Brothers Discovery. What a weird combination, right? What a weird combination. Nuvi, Village Farms, Under Armour, Biogen, however you say that one, Acbia, Cimatix, whatever, 3D Systems, and AMC, Walt Disney, Twilio, Marathon Digital Holdings, Bitcoin Mining, Affirm, Duolingo, HubSpot, Onic, Galactic, whatever, LI, and some Chinese electric cars, Novavax, Fiverr, Kopkin, whatever, Kopin, YPF, Yeti, Tapestry. Some interesting companies. There's like a ton this week, but they're smaller names. We've already done all the big names. We've done Amazon, we did Tesla, we did Netflix, we did Google, we did Apple. We've done all the bigger names. Now we're down to the smaller companies. There's a bunch of them this week, and so be careful out there if you're in some of the other names that maybe the smaller known stuff like on the screen here. Be careful. We can see things happening and crapping, if the case might be, for going down. Anyway, I was talking about Uber this morning, and man, did you see that chart this afternoon? That sucker was popping. Look at that. I was bullish this morning, talking about a 51, maybe a 55 target. Look at that candle. That's a big FU. If I ever saw one. Like a dip and rip right there. Beautiful. And look at the volume too. Like just crushing on volume. Typical earnings day volume. But man, oh man, that's going for the target. Hope somebody out there got a piece. That wasn't me. I didn't do anything. Didn't even take my own I don't know. It's not really advice, but didn't even jump on my own setup. Anyway, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here is intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell anything, financial instrument or otherwise. Don't buy stocks, don't buy options, don't buy futures, don't buy Forex, don't buy cryptos, don't sell any of them, don't trade. You can lose money, substantial risk of loss. I don't know how to make it any clearer. If you desire personal financial advice, you need to hire a consultant financial advisor. That's a fiduciary duty to take care of you and give you advice based on your financial situation. That's not me. I'm not into personal details. I try to help everybody the best I can without giving personal financial advice, because you know what? I can't. Like that, it's against the SEC rules. So if I start doing that, then I got to be registered. Then I got to be careful what I say, and more careful. And I got to base it on your financial situation. I mean, it just gets to be a whole wormhole that I just rather talk about the charts and what's going on, and let you make your own decisions. All right, deal. That's what I'm here for. Welcome everybody. If you're brand new, if you've ever been here before, I mean, obviously, who said it was brand new? Just a second ago, I saw it, and then it's gone. Completely, man. Yeah, Greg Johnson right there, brand new here. Make sure that you ring the bell, dude, with the notifications. Get the alerts. Obviously, you've already subscribed because you could chat on the live stream. So all you got to do, if you want to chat with me on the live stream, hit the button right down here. This little green overlay with my logo on it. Be a subscriber. And a few seconds later, you can chat with us on the live stream. Then, like I said, hit the bell with the doodads. And then you can get, if YouTube thinks you're going to watch it, they'll send you a notification. If they don't think you'll watch it, you won't get a notification no matter how many alerts you turn on. It's kind of ridiculous that way, but it's kind of the way YouTube works. Dang AIs, always trying to do what's best for us. Anyway, welcome everybody, welcome. So S&P 500, look at this. We're just hovering right in that resistance. We're hovering. Are we going to break down? Are we going to break out? Hey, Rick. Hey, Maurizio, author, Rick. Rick, different Rick, Hawk, George. Welcome everybody. Hovering. Are we going to break the key resistance? We're just in a good old-fashioned resistance. When we look at the S&P chart, we pop this up for the candles. Look at this. We're stuck right in that. So we gapped down right here. Just back a couple weeks ago, we gapped down right there on September 20th, the boss's birthday. The day after, we gapped down, left this big gap here, and we have been unable to fill it so far. Today, we poked up in here, softening it up. Once we get it to the top of it, I mean, gaps are resistance. They really are. They're like magnets and resistance all at once. So we came up, rejected, came up, rejected again, came up, rejected again, but we're softening it up. We're working our way up. Now, what happens when we get to 4,400? That is the question. I mean, that really is the question. When we get up there, we got to be careful. All right, we could see the market turn down. That's the bottom of the key resistance zone right here. I have this key resistance with this 44.12 in there. The fib lines, while they are definitive lines out to the second decimal place on the charts, I like to consider it to be a fuzzy zone because everybody sees the fib lines. If you use the fib lines, you see them. So what happens when everybody kind of sees something? Well, we tend to smear it up. We push it just a little bit further. So I look at them as kind of fuzzy zones right there. They, plus or minus just a little bit. And using that view, it works out pretty well for me. Like it if you can look at the fib lines that way, it becomes like this one right down here. We touched right in that 1272. We went just a little bit past it, and then we bounced. And then we came right back down and went a little bit lower. Then we came up, went a little bit above it. And then we came on down to the next level right down there. So if you look at them as kind of fuzzy zones, then you start seeing these zones much more clear. And we tend to consolidate right around them too. Like that 618 up there, we kind of blurred it up right there. And then we've come up short, and we've come up short again so far. It's going to be a key resistance zone. It just is. Now, if we can get a 5 up into it, hold, and break out, we could possibly be going higher. And getting above that resistance zone could set us up for a move to 4720, possibly even 4800 plus on this next move. Yeah, pretty cool if we can do it. But if we turn down and we break down lower, watch out. We could go lower than what we saw back here in October of 2022. All right, we left a fib line untouched down here. We came up short. We could go visit that. So just be careful. All right, we haven't confirmed anything yet. We did more hovering today. I was saying that moving my alerts. That's brilliant. I don't even know where that alert used to be. That's not what I meant to do. Awesome. Oh, that's the one for 42.75 is where that one used to be. Yeah, put it back on 42.75. Right there. Too high. Go down just a touch. Come on. Yeah, close enough. Close enough for now. I don't want to break below this zone. We may come back to the roadmap line, hold, and pop again. I don't really want to go much below the roadmap line. Certainly not below where this little band is right in here. I've got lots of stuff. This, for being a simplified chart, I've got so much crap drawn on this chart because this is all important. And I mean, I started out with this chart back in August of 2022 when I drew this big red arc right here. I was like, we're going to turn down. And down we went right into the abyss last October. And then I was like, you know, we could turn here, and we very well darn did. And we hadn't looked back that low since. We broke up through the trend line. We retraced and tested it. Then we went on this epic run from March to July that was in the top 5% moves ever in the S&P since World War II. And then we've been in this crazy correction, potentially trying to break out of it. I mean, there's a little bit of positive going on right now. My chart of the week on x.com, you know, the platform formerly known as Twitter. Chart of the week, TQQQ. Let's go talk about it real quick. TQQQ, right here. A beautiful potential breakout right here. Look, when we look at it, look at this guy right here. Dun, 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 dun. We see it popping up right there. Beautiful candle right there, breaking the downtrend. Look, that was high, lower high, lower high, lower high, lower high, lower high, held for a couple days, and then pop. That is an aggressive entry right there. All right, we can fail tomorrow. We've seen it before. We can do it again. Stuff like AMD did this just a couple weeks ago, where it popped up and then failed right back down, but then it was a fake out. Did a big fake out, you know, big joker. You're a big fat faker right there. We went lower than we did right here, but then we popped, and now we're breaking out again on AMD. I'm off of it right now because I don't like ones that do this, that mess it up. But we broke out of the downtrend, then we came right back down. So we're not out of the woods yet, is what I'm trying to say on TQQQ, but we see the same pattern on QQQ, right? We've got the same downtrend cooking. We did the same push above, you know, lower high, lower high, lower high, lower high. Not quite as perfect as it is on TQQQ, but we pushed above today. So be careful. Be careful, be careful. All right. S5FI. Beautiful. And it's not breaking the highs yet, but it is, you know, QQQ is breaking the downtrend. That's the big thing there. Now, S5FI, this is interesting, right? As the S&P pushed higher, S5FI went lower. That's curious. You know, I'm not saying there's anything to read into it, but it's just curious. Like, as we went higher, as we've ground higher, there's less S&P 500 companies above their 50 days. So that means fewer of the companies are making the gains. Watch for the pop above 80. Anytime we've done this double tap below 20, we usually pop up above 80 in just a few weeks. So the coming weeks, I do expect to move up above 80 before any kind of big old drop. Now, could this recharge a bit? Yeah, it can recharge before we go on the next run. I do expect it to pop up before we break back below 20. Yeah, it's a little bit of divergence. So we may need that correction. This may be indicative that we're going to see a correction in S&P, which, I mean, we're coming up to some key resistance and some major, I mean, this is pretty major resistance right here. And then the key resistance on the big, you know, simplified chart is just right above that. So it's a couple layers of resistance right there, some confluence, if you will, that may result in a pullback. So that's the case. All right. That's what we're looking at the next few days, the next week or so. It's kind of where we're at now. Jerome Powell, we'll talk about some earnings here in a second, but popping in, checking out the calendar. We've got Jerome Powell doing some speeches and stuff. It's kind of interesting, right? He's going to be speaking on tomorrow at 9:15 in the morning, right before the market opens. Could be some volatility, right? Then we also have him speaking again on Thursday afternoon. Why? I don't know. We'll find out what he's got to say. He's probably going to beat the drum about the maybe how we're running hot and the bonds have kind of tightened up the financial conditions and this, that, and the other. And then we also have coming up on the 18th, we've got the next Fed shutdown, the government shutdown thing looming. We got the new House Speaker trying to get that crap resolved ASAP. I mean, these are threats. It's known threats, known events that are coming up. So, and watch out. We'll get to requests in just a minute. Chill out with the request. Just a minute. I'll give you a heads up. And so that's the highlights right there. All right. Now, we usually go through a few of the markets and review some of the futures and the outlook. I've kind of given you the S&P, the QQQ, potentially breaking out. That can be very positive. All right. Now, ES also working on this head and shoulders. We may see it come up, meet the neckline over here. It could move the neckline down. It could move it up. I don't know. We could see that, and then a retrace, retest the roadmap line, a breakout, and we could see a huge move up, right? This thing's kind of sitting there cooking. I mean, look how many green days that was on the futures. Now, Nasdaq, look how many green days it is in Nasdaq right there, breaking above the downtrend, also on the futures. Highly positive. Potential to go much higher. We need to break above this high right here. We need to break above this stuff right here. This was look how many days we consolidated. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days over like a 2-week period. Just churning right there. That's resistance. All right. So some positive things are shaping up. We do still have resistance above us. All right. I don't think we're just going to blast off without a retrace. I mean, that's a lot of green days. We'll probably need a retrace in here. Be careful. We're getting a little extended here off that low. We were a little oversold, a lot of oversold, and this is a heck of a move up. But look how many days without a red day in there. Just be careful. Market doesn't like to continue extremes forever. All right, we do get retraces. I mean, look back through here. When's the last time you saw this many green days in a row? Hard to find it. All right, be careful. Be careful, be careful, be careful. Please be careful. I'm just using the futures for a gauge of the markets. Now, Russell, getting a couple red days. Not participating to the level that we see on ES and NQ. Now, we could see this pop on up to the roadmap line and then get a bigger retrace and then break out above the roadmap line. That would be super positive and an indication that we're going higher in the markets. But we're not there yet. Still not there. Oil, broke down, went on down. Look at that. I was talking about that zone this morning. I just drew this box on there this morning. And we're already getting close. We broke below those lows, probably coming on down to this 618 level right here around 75. If we come down to 75, break back above the roadmap line, we're going higher. If we break down below this zone, probably come on down to 70. If we get below 70, odds are we might very well go lower than what we saw back here in April. All right, these are the levels, the support levels right here around 70. Draw the box. It's the next one down. We get below that one. Odds are, just like the roadmap line pattern, we're probably coming down here. Oil was way overbought, lots of overinvestment, and it's not really shocking to me that we're going down. I do kind of expect it to hold the 618 level and go higher, but it doesn't have to. Certainly doesn't have to, all right? Doesn't have to do anything. Right there, yeah, 100%. Right there at 76, could go to 73. And you see these two different fib approaches create this zone right there. A little more perfectly. And that's just an ABC move off this high. A, B, C, right down to that zone. The 100% right there, 1272 right there. Classic levels for an ABC to stop. So, all right. Yeah, I thought there was a shortage. Guess what? Oil's plummeting. So, remember, it doesn't make any financial sense. Doesn't make like, I mean, the news stories out there don't make the charts. The charts make the charts. All right. And I brought something to talk about. Speaking of LiPo, let me pull something up and bring it over here. Right here. Check this out. 6 psychological pitfalls to avoid. Number 1, seeking confirmation of your own beliefs. Right there. You thought there was an oil shortage. You seek confirmation of that. Then you trade based on that. And then you get ripped because oil takes a huge plummet one day, like today, and does this big red candle. And you're like, what the beep? Right? So, that's a psychological pitfall to avoid. Look at the charts. Remember, it's not being wrong that costs you money. It's staying wrong. All right? Be careful out there. Don't stay wrong. When something proves you wrong, change it up. I love these Temu ads. They're weird. All right. Mistake number 2, conflating recent events with ongoing trends. One of the most dangerous investing mistakes is to believe the current trend of the day is going to continue. All right. We had this big move down in the S&P, and everybody's like, oh, we're coming into Black Monday. We're going to plummet out the worst plummet we've ever seen, right? We saw this setup back here. And I'm moving fib lines again. We saw this. Oh my gosh, I heard so many people talking about Black Monday. We're going to plummet out. It's going to go super low last week right before Halloween, right? We're going to, this is going to be the biggest crash we've ever seen, blah, blah, blah. And then we go on this epic rip. A lot of people I know got caught upside down, betting on lower. They weren't listening to me because I was saying we're probably going to get a big relief rally. But, that's beside the point. And now here we are, back up. What? Almost 200 points, a little over 200 points. I said we were going to get a big 200-point move. Here we are. All right. Be careful on that. Now, moving on. Number 3, overconfidence. I try to stay humble. I really do. Very successful and driven people often assume they'll be just as good at investing as they are at other aspects of their life. However, this overconfidence is a common cognitive bias. All right. Just because you're good at other things doesn't mean you're good at investing. Just because you're good at investing doesn't mean you're good at other things. All right. Don't get overconfidence in this. Try not to get cocky. Try to stay humble. The market has this really, really powerful effect where it puts you in your place really quickly. All right. Get real and get honest. There you go. That's what I try to do. I try to be honest with all of you every day and tell you the real deal. Like, if you try to stick to one thing, like if you decide the chart's doing something, you try to stick to it, remember that thing. It's not being wrong that costs you money. It's staying wrong. Don't stay wrong. And be willing to change your opinion in the face of new information. All right. This is right off of Visual Capitalist right there. I can pull it down. You can get right there. Visualcapitalist.com. 6 biggest mistakes ordinary investors make. Right there. So, it's not my thing. I just pulled this up. I found this. I got another one for you here in just a minute. You're going to love. So, number 4, swinging for the fences. Now, this one, I don't swing for the fences, but I do hunt elephants. All right. I go for where I can risk just a small amount and potentially make pretty big money. I mean, some people call that swinging for the fences, but when you go at it and you tend to get things right, if you risk just a little bit on something with huge potential reward, and think long term, you get in those positions that give you months out. You don't have to be, don't play the 0 days. The 0 days, I mean, some people are good at it. That's not me. I don't play that game. So that's not where I'm at. I'm not swinging for the fences on a small time frame. I try to, it's more like gambling when you're doing that. It really is. Try to be strategic in what you're doing. Number 5, staying home. Now, this isn't like staying home. This is don't get home bias. Don't stick to your employer's stock, your own industry, your own country's stock market. I bounce around all over the place. One asset class. If you get stuck in just trading what you know, you can get overweight, and when that market gets wrecked, you get wrecked. All right. I like to spread it around, have some diversity in what I'm trading, what I'm watching. I watch for the same patterns. The same patterns work everywhere. but that's why I diversify. I bounce all over the stock market. Seems like I'm ADD a little bit or ADHD, but I'm just diversifying what I'm watching. All right. Number 6, negativity bias. Our brain, I talk about this all the time. Our brains are wired and bombarded with memories of negative experiences. We love negative news stories, right? We love it. We're drawn like moths to the flame. All this mainstream media, we're burning it down. Especially when the markets plunge, we love to read bad news. It seems like there's always bad news. It seems like the news is always bad about everything. It's because we are hardwired to love that stuff. Like we're drawn to it. All right. Be careful. Try to stay grounded. Prepare. Don't get caught up in that negative feeling. Like just because we were so far down and people are calling for a crash, that's negativity bias. All right. Signs were that we were setting up divergence and that we were about to pop. Even a good friend of mine flipped his analysis negative. It was like, all right, I'm negative. And that was like a key sign to me. I was like, we're about to flip in the market. And sure enough we did. So be careful out there. All right. Now, here's the other one I thought you might like. 20 common investing mistakes. Expecting too much. No investment goals. Not diversifying. Focusing on the short term. Buying high, selling low. Now, I get caught in that one sometimes. Trading too much. This is why I try to sit on my hands some days. You're like, JT, what's going on? What are you doing? I'm like, nothing. I've learned to try to not trade too much, especially on the exciting days. I'm like, oh, I want to do stuff. Oh, I got to sit on my hands. Controlling your costs. Don't pay too much on fees. Focusing too much on taxes. A guru friend of mine, he's like, don't focus on so much on the taxes. Focus on making the money, and paying the taxes is just part of doing business. When you make the money, then you can pay the taxes. But I mean, there's some smart things you can do, but don't focus too much on your tax loss selling and stuff like that. Don't lose sight of the big picture of what you're doing. Yeah, not reviewing regularly. I've fallen into this in the past. You need to make regular reviews of what you're doing. Sledge, I know you're really good at this. Taking your weekly notes, reviewing what you did wrong, what you can do better. You need to review it. Misunderstanding risk. I see a lot of people do this, especially on options. You've got to understand all the risks, all right? Implied volatility, a big part of options. You need to know what you're trading and the risks that are inherently involved. Then not knowing your performance. That's another one. Like this goes back to reviewing. Like you got to know how you're doing, all right? And it's not just the P&L number. It's not just looking at the number for the year. It's like looking at the stuff. These 9 and 11 kind of go hand in hand right here. So reacting to media, that's a big one right there. Don't just turn the news off. I talk about that all the time. That's like the number, like on something else I read, that was the number one, was reacting to news right there. So be careful. Number 13, forgetting about inflation. If you buy those treasuries that were paying 3% and inflation's now 4 or 5%, well, you're not making any advance there. So historically, inflation has actually averaged 4%, not 2%. So you need to be making more than 4% return just to keep up with inflation. Trying to time the market, that's difficult, incredibly difficult. You got to follow somebody that gets it right. If you don't have a history of making good decisions on timing the market, hang out with somebody that does. All right. I'm not saying that I get it right all the time, but I do kind of get it right. So not doing your due diligence, know what you're trading. This is a common theme here. You got to know what you're trading, know the pitfalls, know what they're doing with it. If you're in an ETF, know how they manage it. What are the fees? Do you know the fees on SPY? Do you know the fees on BITO? You got to do your due diligence. You got to know the fees. You got to know this, what they're doing. All right. Working with the wrong advisor. That's what, my disclaimer at the beginning, you got to hire a financial advisor that has a fiduciary duty. And you need to know one, you need to have one that knows his stuff. That's not me. I'm not an advisor. Investing with emotions. I see a lot of people about this. They're very emotional about cutting losses. So you got to be able to cut anything without, some of them bum you out. That's back to the don't stay wrong. Like sometimes facing facing the fact you're wrong, it means, you know, you got to deal with the emotions of the fact you're wrong. We don't like being wrong as humans. You know, be careful. All right. Be careful. Chasing yields, you know, that, I know Goose, you fall susceptible to this one a little bit. Well, man, be careful. Chasing yield. Neglecting to start. Now that's been one of my big things. The hardest part is the first step. You know, getting started. You just got to get started. You know, a lot of my younger followers, you just got to get started. You can't just get started. Like, you can't know everything before you get started. You got to get started and figure out what you need to know. You got to make the mistakes. The mistakes, sometimes we pay for our educations. Unfortunately, that's part of this game. You pay for the things, and then that's where you learn the most. So, and then not controlling what, you know, sometimes you don't have control. Control the things you can, what you're invested in. Sometimes you can't control things. Like, you can't control Google stock. You can't control the market. All right. Control what you can, and then let go of what you can't control. So there you go. That's 20 things. That's also Visual Capitalist right there. Common investing mistakes. All right, look at the chat right there. Want to make a boatload on BRBR and CBOE, also Uber. I mean, you know, be careful out there. And how many long-term trades and how many short-term trades are you comfortable having open one time? I mean, I like 1% on each trade, and then it depends on how bullish or bearish I am versus how confident I am in the market direction to how much of my capital I'm using. I tend to reserve upwards of 30 to 40% of my capital in cash all the time, and then kind of strike a balance. And I don't tend to have a lot of long-term trades. I'm a short-term type trader. I have some long-term investments, especially for family and retirement accounts, but yeah, it's kind of a dicey market right now for long-term stuff. Like, it's not really a buy and hold. This is more of a trader's market right now. So, and those, you know, CTAs, certified trading advisors, you know, they do take a test, but they don't always have your best interest in mind. So you need to work with the right ones that actually take a vested interest in what you're doing, and they have a history of getting it right. All right. If they're not willing to share with you how right they are, and I mean, if they're hiding stuff from you, run away. Really, seriously, run away. You know, my mom, it's been a story some of you know that my mom got, you know, hooked into a Ponzi scheme by her certified financial advisor, and yeah, he lost his whole business, and he was a local person. He never went to jail for it either. Kind of, I don't know. I have a disdain, I guess you would say, right there. I made the money back for her, but, you know, thank goodness she listened to me and didn't give him all the money, just half the money, and I made it back for her. But I mean, that was and then if you're feeling like you're FOMO, look at this one. Look at this right here. Invest in whiskey. You 3,000 pounds down. You know, this person bought in Macallan 1988, bought in for $5,000 cask, sold it for 1 million pounds. That's like a 19,000% return in 34 years. That's pretty good right there for just a cask of whiskey. This kind of crazy investments available out there. So let's actually get into 30 minutes of awesome. So now's the time. One ticker per person. I will take your requests and we'll go through it. All right. All righty. Let's go for it. I see MSTR right here. Yeah. So, I mean, same target, same target, 532 right there. And 616 above that. 616 above that. Nothing's changed. That's the market roadmap pattern bounce. It's been on the path. It's probably going to reach up here. 532. All right. ARKW. That's a wild one. Next generation internet ETF, huh? Coming up with something weird. It's trying to stump me or something. Look, that's a 3-wave corrective up right there. There's no two doubts about that. Look at this proportion right there. Coming up just shy of the 100%. Retracing, overlapping. Caution. Do have resistance right there. We may be in for a deeper move here. Now, can it turn into something bullish? Well, sure, it could. I don't like this overlap. That's not extremely bullish at this point. Could be that this is a, before I speak, yeah, this could be a leading diagonal, what they call a leading diagonal, where we get 1, 2, 3, 4, 5 up into this area. Then we get a deep retrace, and then we get the next move. So let's check this real quick. I think these are probably similar size moves. They are not quite perfect. We may get the next move up into this area, maybe something like that, and then get a deeper retrace. This is not a common pattern. It's not a reliable pattern, and it's not one that I really care to try to do anything with. So be careful on that one. LEN. Linear. Potential bounce off the roadmap line. We're at that first initial resistance zone right there. Above that is an aggressive entry. More conservatively would be a move up through this up here about 127, right around the 618 level in that consolidation. Yeah, fuzzy zone right there. Get above that, probably 139, maybe 147 on the upside if we can break out. All right, Pepsi has been beat down, and it's kind of one where the mainstream narrative kind of fits with it. You know, we're seeing a lot of these stocks go into this correction. Clean this up a little bit. We've seen a lot of these stocks like Pepsi, Coke, junk food type stocks, you know, Yum Brands, McDonald's. All of these are kind of falling victim to this narrative about GLP-1 drugs. And that's, you know, Converse to Lilly and NVO, Novo Nordisk right here. These GLP-1 drugs are kind of probably putting the hurt on a lot of that junk food stuff. And even my neighbor Donnie, my old man best friend, he was talking about Ozempic and how he was like, I gotta have that stuff, man. Like it's like, he's like, it's changing my life. He's already dropped like several sizes on his pants. So it fits with the mainstream media narrative, but that's also a correction. And how low can that correction go? Pepsi may be on the way down here. We had a huge up in a lot of these things. Look at that move up. It would not surprise me to get a correction back down to this area before we find a base and move higher. So it all lines up. Sometimes the mainstream media narrative does fit with what's going on in the chart. Sometimes, but it's not the driver. All right, don't get caught up in it. Keep the mind on, you know, keep the chart in the front of mind. Spot is probably going to break on up. 195, possibly 213. I am still long on spot. We're stuck right at the breakout level. If we can break out higher, 195. We may go to the roadmap line one more time, though. We might. Alrighty. If I say anything you like, give me a thumbs up. If you know, give me a heart. Interact with the video while I'm live. And if you're watching this later, leave a comment down below. It helps the video. Like the YouTube AI thing loves it when you interact with the videos. So it's like, hey, this video is popular, and maybe I should show it to more people because people seem to like it. So yeah, everything. Like, MSTR is tied to Bitcoin, and Bitcoin was trying to break out through 36 just a little bit ago, but getting rejected one more time. So the potential pathways for Bitcoin, you know, we did come up to this 1618 level, right around 36,000. We kind of hit some resistance there. We pulled back. The kind of potential paths, like Jerome this morning, we either go sideways and then break out. We retrace back to the breakout, which the breakout level was, you know, from back here earlier in the summer. We broke out. We either retrace back to that breakout, retest it, and then go higher, or we retest it and fail and come all the way back down to like the roadmap line. And then do we find support there, or do we go lower? Now, I'm kind of the opinion that we're not going to see 25,000 again, but you know, before we go on the next halving run. We could see that, but I don't think we're going back down in the 25,000 area. I think that was the last time. I commented that, what, a month ago almost, that once we leave this area, I don't think we're coming back. And at this point, we're hovering. This may be the sideways and break out, but I'm not dismissing the fact that we may retest the breakout before we go higher. I give, these are all kind of equally probable right now. The way price action has been going, it looks like we're going to do the sideways and pop. So, all right. Kimber's looking for me, huh? All over. Doesn't know I'm in the box. I'm in the screen. Anyway, Kimber's my, what do you call it? I don't know. My brother's dog. I guess my brother and his wife's dog. Anyway, there you go. NVIDIA did the bounce off the roadmap line. Now, one thing to watch. See the downtrend of the highs? This one not quite breaking out. Found resistance. We've got the set of lower highs there. Not perfectly drawn. Clean it up just a hair. Gonna have to raise that up just a hair. You see it right there. We didn't push through like we did on TQQQ and QQQ. Even Apple breaking up above the downtrend. But NVIDIA not. So red flag right here. Caution. Unless we can get above that. It's also the 618 level. We could turn down right here and go lower. Be careful. All right. We did the head and shoulders. We failed the pattern so far. If we're not making a higher high, watch out. We can turn down one more time. Now, big question. Can the market go higher and NVIDIA not participate? I don't know. That's a question. Could it happen? Yeah, I don't know. But we did bounce right off that. We've come up to the resistance at the 618 level. If we can make a higher high than 478, we could be on the way to 532, possibly 571. I was just looking for a touch. We did the touch. All right. I can circle back to natural gas in just a moment. SVXY. That's my chart of the week last week, and everything's going to plan. Beautiful. We got that resistance right there where we did the gap down. Could that be it? It could. Could we retest the prior high? We could. Could we break out? We could. The super conservative target right there at the prior high. If you're a scaredy cat, book it now. If you got in down here. If you just got in, just take it easy. Chill. All right. Super conservative target was the prior high. Conservative target right up here at about 98. And then up here around 103, 104 is the more aggressive target. Set that to the actual high. So we have 98, 104-ish. And right now, I am long like 30 contracts. So this thing's looking pretty sweet. I have no reason to doubt that we're not going to at least retest that high. I mean, it's not even that far. We're only talking 4 points. So beautiful setup right there. Sony. I don't even think I typed the right keys. Sony. Try it again. Sony. There we go. It's not a bullish chart. Actually, that looks like a 1, 2, 3, 4, 5. That looks like a wave 4 correction. Maybe that was a wave 5 right there, and this is the reversal. I mean, it could be. That was the lowest low. I mean, that could have been the 4 and the 5. Maybe. But here's the thing. 5 waves don't make a correction. 5 waves are an impulsive move. Usually, we would do a second move that would be up to the 618 after doing the 5 down, 618 retrace, and then get another repeat of the first move down. Something like this. Right over here, and maybe down to 70. So like this, and then like that. Now, if we could break above this, then maybe that correction was just weird, and this ended up in a weird reversal thing, and that was actually an A, a B, and a C with a funky way to end it. But yeah, off of that big down, this retrace, and I bet you, let's see, where's this 618 level come in? Oh, look at that. Yeah, that would make perfect sense right there. Retrace the 50, back up, and right in that zone. That would make the pattern actually pretty good for going bullish after that. There you go. All right, moving on. BT. Stuck in the under the roadmap line. Till we can break out. It's just stuck. Just like so many other crypto miners. They're almost all got the same pattern. They're stuck under the roadmap line. That's why I say so many times that it's key to wait until we're above the roadmap line to go long on these things. Mara is the same, stuck under the roadmap line. Riot might have pushed above, just barely, just sitting right on top of it. Not really, I mean, it's just stuck right there. Hut, same situation, stuck right on the roadmap line. So we're seeing the same pattern across all the miners. Be careful. Now, if we start breaking out, if we start breaking above these highs we made right back over here in August, things can get really spicy really quickly. All right. But as long as we're stuck under the roadmap line, it's just, they can sit here and drift for a while. Doesn't have to do anything. All right. UNH has been pretty positive. I think it finished up its correction back here. I keep moving that C wave over, and it keeps moving it back. That was pretty much the low I expected, and it didn't do that bounce for certain. Now we're doing this bounce, and next target up right around 583, possibly as high as 609. And that's already pretty bullish. 1, 2, 3, 4. Yeah, probably top out somewhere around. I would bet. Yeah, that's what you want to hear, right? I would think right around 580. We could find a little resistance going through this 100% level, but yeah, probably find some resistance at 580. All right, Microsoft was approaching the prior high. The extension 382, possibly 401. That was a beautiful roadmap line bounce. 382, 401. That's the targets. KO, I mentioned KO a minute ago, is kind of like Pepsi, looking like it could go lower. We're doing a retrace up to the roadmap line. We got kind of extended. We kind of did the head and shoulders failure pattern. Didn't quite make it all the way to the target. We may find resistance at the roadmap line and turn down. Good grief. People talking in Discord instead of getting on the live stream. So we may see that. Be careful. Right there. Could pop up a little bit higher. Yeah. That would complete the pattern. Right there. All right. ARKK. Whoa, I just flipped the chat. Yeah, that's a downtrend. And we're below the roadmap line. Be careful. Be careful. It's flirting. Flirting with that resistance. Can it break through? That's a big question. That's a 3 wave right there. That's like a 1, 2, 3, 4, 5. Retrace. May get continuation lower. Be careful. This may be an indication. This 3 wave correction thing right here. That right there may be the indication that we're actually going to get continuation lower. And that continuation lower, unfortunately, could be down here like 23, possibly even 16. Be careful out there. All right. And it's on the move, but be careful. Roku recovering, but that's still lower high, right at the resistance line I drew, funny enough. Just happen to put these lines in the right spot sometimes. You see, that was a big spike up, and resistance over here. That's been a tough zone to get through. Now it's 1, 2, 3, 4, 3 days in a row now. Stuck right there. Can't get through. Be careful. That could turn down. We can go right back lower from this zone. And that was a nice retrace. to a support level, but is that the final answer? I don't know. We could see a move down in this $40 area. That could take ARKK down with it. So be careful. USO, right there, plummeting out to the roadmap line. Where might she go? How low can she go? They can all go to 0. That's right to the 100. We may see a push down to this 69 area right here. And my favorite play is UCO, but leverage stuff doesn't always follow the patterns, so I'd be careful on leverage. Right there, we could see a push down into this $28 area right down here on oil, on ultra oil UCO. All right. Natural gas, NG1, exclamation point. Man, look at that. I said there might be some resistance, and lo and behold, my level is still 375 for breaking above to go higher. If we break back below, I mean, this is just increased volatility at this point. If we break back below, we could easily retrace all the way back to the bottom. The natural gas storage in Europe is full. Blows your mind, right? Natural gas storage in Europe is full. Now, if we get a cold winter, that could change. But right now, things are mild. Natural gas storage is full. Where's the demand? I mean, it was what, 80 degrees here today? 70, 75, 80? I don't know. It was nice and toasty today. Yeah, 78 was the high. So, I mean, so far, pretty benign winter. Now, here we are in November. All right. That was natural gas for you, Bridget. Meow. Come on, Sledge. That's not a ticker. All right. Yeah. I need you to be serious, right, Meow? All right. Airbnb. That one was a letdown. We went right to the 1272. That was the ABC pattern right there. Right there. That was the A. That was the B. It's the same pattern I've been talking about. C pattern right there. Could it extend down to the 1618? Yes, it certainly could. We breached the 100. Kind of retested it. Reached down to the 1272. Retested it. We could reach down to the 1618. We could. The kind of delimiter, the dividing line between these right now is this roadmap line. We stay below it, bias is down. We get above it, we can start talking about going higher, but we need to break above this high right here. That's why my alert is at 133. Otherwise, bias is still down. Still in a correction. It mucked up a beautiful potential back here and went lower. I mean, sometimes I get it wrong. Sorry. Airbnb has not been my sweet spot. Even though it looked like it was going higher, it went lower. And, hey, seems to fit with the mainstream narrative that people are unloading their Airbnbs. So, imagine that. Illegal hotels don't work. Who could have guessed? Anyway, BWXT, that's a weird one that I expect to probably retrace to the roadmap line at some point. It's been really echoey, and it held the 618 right there, which would kind of, sort of, maybe make me cautious that we could see a retrace on deeper. Oh, look at that. The echo of the first move down would be the roadmap line. Does it have to do that? No. If we can break above that high, heck, 81, 83 on the next. I mean, look at all these little echoes and extensions right there. It can certainly go higher. It's been grinding higher for months and months and almost 2 years. Grinding higher. It's like as the stock market topped out, this thing bottomed out, and it's been just grinding higher. So be careful on that one. It might work. Coin. Gosh, man. I'm holding a synthetic long from 60. What does synthetic long mean? It means I bought a call, sold a put, and bought a put lower. And my long call, short put is at 60 down here. I just have one of these. It's right down here. It's out a ways till next year sometime, I think. And if this thing pops up to my target at 166, it's going to be crazy profitable. I think it's already crazy profitable right now, but it's sitting there right at this resistance. If we can break above, we'll probably go retest this resistance. Where did that one come from? Looking over here, this high right here. Several people that I follow that do similar stuff to me are very bearish on this. I just don't see it. It looks like a bullish chart to me. And I think the target's probably up here around 170. We'll probably retest. There'll probably be some resistance at the prior high at 112, 113. May take us a few days to get through, but 160, 170. Yeah, don't risk money you can't afford to lose. Amazon. I've been saying that this was potentially bullish. Look at that move. Beautiful dreamer. 150, 160. Those are the targets. Same targets. Market roadmap bounce. That was it. Right off of the support. Those are the next resistance points. Could we go higher? Well, yeah, we could. I expected it to get up here in the zone back in June, but here we are in November. It's taking way longer than I expected, but time is probably the hardest thing about what I do. I can predict prices pretty easily. Time is freaking difficult. And yeah, we could go even higher. I mean, look, while you've got Microsoft and Apple and all those pushing highs, this one, look how far down we are. 190 is the prior high. We're sitting down here at the 618 level, 138, just barely pushing above. I mean, we get above this, then odds are bigger picture, maybe the next couple of years, we could see 238, possibly 318 on that 1272 and 1618 move of this correction, the correction that took from July of 21 down through December of 22. So it started the correction early and it finished the correction late compared to QQQ, and could be on a bigger path. I mean, we could be talking out 25, 26 coming up in here. Beautiful setup on Amazon. SOXL is a leveraged instrument. Be careful on leverage. That was the old entry. Probably should remove all this stuff now. It did all that, did all that, did all that, did all that, did all that. That's still resistance. Didn't play out the big head and shoulders pattern. Clear that all off. So here's what we got. We broke below that key support level. It was support because we were above it. We came down 1, 2, 3, 4, 5. That's kind of like that overlapping crap I talked about earlier, where that could be a leading diagonal. This could be a deeper retrace. We could go lower. That's not good, right? Niche Keats. No bueno. Unclear. And maybe because it's a 3x bull. SOXX. Also unclear. That's very overlappy and kind of gnarly. Although it could be a market roadmap pattern. It could. I went to an unleveraged version. And we're going to have to break out above this to go higher. And then SMH, another version. Still looks pretty gnarly. And you may be like, how does JT remember all these tickers? If you pay attention to sports ball, baseball, football, basketball, hockey, whatever your poison is, and you know all the players and all the tickers and all the, I mean, all the all the tickers, yeah, all the players, all the teams, all the, you know, the stats. I do that with tickers. So this is my sports ball. So that's why you love me, right? All right. Did that one. IONQ. Was kind of bearish. Breaking below the roadmap line. That was highest high. I don't know. That could be it. I'm not going to say it's the bottom until we're back above 16, looking for 27, possibly 36. But there's the line. We're below the roadmap line. That's bearish. Could go an extension. $8, $7 on the low downside. Alrighty. XOK. Yeah, nice move. Broke out of the downtrend. Upside 186, 192. Actually, let me fix that. Just 187, 194. Get you $1 more on each one. Yeah. I mean, does have a little bit of resistance right there at that high. Break out above that. Game on. Going higher. All right. Bud. Anybody watch the Cosby Show? Bud. Name's Bud. This one has been hovering for forever. I was kind of, it popped up on my radar back here in June. I was kind of bullish. I'm still kind of bullish. I'm up 100% on my, I have a synthetic on this one too. I don't know. I didn't have to go look at the strikes, but I have a synthetic on this one. It's up 100%. I saw it at the close. I was like, hey, that looks pretty good. If we break out up through my activation price about 60, then we could very well be on a path up here to 80 to 89. Be a pretty sweet move. This is a measured bounce setup. You may be like, what's a measured bounce? You should take my fib class. I don't have a link for it, but that's where I teach that setup. It's an Elliott Wave 1-2, and basically simplified for, you know, the 30-second version. You move up, you do a retrace to a 618 level. You hear that 618 level all the time, right? You do the retrace to 618 level, works up and down. You can come, you know, you can do it the other way. Move up, retrace to 618, and then take off. Well, this one started to take off, then came back and revisited. Sometimes they do that. Makes it less awesome. But if it can actually take off, break out, then the extension would be right up here, like the 100 to 1272, way up here. And that's based on an echo of this move right here. You would at least expect an echo of this move off of that 618 level. Puts us right there to that $80 level. See how powerful that is? Beautiful potential. And it could take that long. I mean, it could take us out to March. And if it gets super excited, we could go on an extension out to the 1272 at 89. There you go. Google doing the roadmap bounce. The activation price on the gap fill sets up for 148, 155, possibly the move up to the extension up here. That comes from the bigger pattern, I do believe. Get the bot. Yeah, right there, the 1272, 171. With rates, oils, ags, metals, flow, whatever, bow, weak. Is the recession soon? All right. Rick, you got to separate economic recession from the stock market. These two things, two different things, completely different things. All right. The economy can go through a recession. The economy probably did a recession. In fact, I've got YouTube videos that we did a recession. That not a recession. I don't want to get canceled or anything. We did that. We did a recession. We're coming out of it. That's this was the recession. We did 2 consecutive quarters of negative GDP. Nobody wanted to admit it. Now, it would not surprise me if when we make a higher high, everybody goes, oh, you know what? We did a recession. Everything's cool. We came back out. Nothing to worry about. Sorry. We didn't recognize it till now that we're through with it. It would not surprise me one bit if that's how it goes down. So, and they could do that right into the election. Be like, hey, you know that recession that everybody's saying we're going to do? We did it. And we saved the day. We pulled us back out. Everything's cool. Need to reelect our leadership. Wouldn't surprise me one darn bit. So watch for that narrative. All right. SNA. Yeah, we've already gone a full hour. Cha-cha. Snap on. Wronger love these guys. Tells me about all their cool tools. And we've got resistance right up here at 279. If we get above that, 307, 323 on the upside. But we could find resistance and turn down for another leg. So definitely be cognizant of that. Could see a move down to 234. All right. Patrick, hey, I mean, if you ever have profits, it's always a good time to book them. I'm not saying you're a scaredy cat. I was just talking. Never feel FOMO. Never stay in a trade longer than you should. Always make the decision that's right for you. Book profit when you got it. Nobody goes broke booking profit on every trade. So PLTR, beautiful potential pop. At least not broke because you went trading. You may be broke because you took your winnings and went to Vegas and blew it all on. Yeah, we won't go there. I was about to make a bad joke, and I shouldn't say that in polite company. Anyway, PLTR, roadmap bounce, double bounce, potential breakout, targets 22 and 25. Uber, I kind of hit that one in the beginning. Not sure where you were. Rewind the video at the beginning, 51, 55, and I talked about that this morning. AMD is blurred lines for me. This is mucking up the pattern here. We're not in the all clear going higher until we're back above the 618 level up here. And need to pull that over just a hair. And need to pull that over just a hair. Still the same level. Right up there. We got to get above those highs. See that high right there, that high right there. Got to get above those highs to make the higher targets 143, 157. Otherwise, this can fail and go right down here to 75. Right there. DKNG. I've been on webinars a lot today. I'm about done. There's the move right there, and resistance breaking above target 386 and 39 above that. All right. Meta. High. Retrace the roadmap line. Came up just shy. Next target up 343, 361, and is that the prior high? No, it's just resistance right there from those highs. So we've got that 353 and 384. So there's your targets: 343, 353, 361, 384. If we clear all that, then we could look at extensions to 464. Might take a little while to work through that one. All right. Yeah, I mean, we passed a law that there will never be a recession. Wronger. If you missed that memo last summer, they outlawed saying recession, so you can't ever have one. So we'll never have one again. Anyway, have a great day, everybody. I'll be back live with you again tomorrow morning about 9:15. That's my target time. Same bat time, same bat channel every morning, and we'll hit the markets, check it out, see what Powell's saying before the market opens. Be careful out there. The account you save may be your own. Nobody watches out for number one like number one. That's you. All right? Don't trust anybody else with your money. Make your decisions for you.